Good afternoon. This is Clark Neighbors with BIS Commodities in Cedar Rapids, Iowa with the market recap for the week ending August 30th, 2019. As we close the books in August, kind of interesting to look how tough of a month we've seen in the commodity world as a whole. Corn down 41 cents for the month of August, beans down 13. As a side note, soybean oil was up about 30 cents and meal was down nearly $3. Chicago wheat down 31 cents. Cattle and hogs both down 9 and $8 respectively. Crude was down nearly $6 at $5.80. Stock market S&P is down 60 points for the month. Basically, the only commodity or commodity group that had much uptick over the last 30 days has been the gold market as the safe haven. So we've basically went through a month with very concerning macro environment, namely with the on again, off again trade war saga, which seems to be becoming more entrenched each and every week. Many analysts feel that it may be 2020 before we really make any general progress on this trade war situation, i.e. the election of 2020. So the political side of this is starting to take hold. So that'll be interesting to watch as time wears on. And the other macro thing that's had impression on the commodity trade as a whole is Fed policy and pressure from the administration to lower interest rates. So you throw those two things together, it's made the markets in general pretty nervous. Thus, we're seeing looks like taking risk off the table, whether that would be the stock market or commodities, until things become a little more stable. Looking at the grain markets, um, after having an historic planting season with slow pace, record amount of prevent plant acres, etc., the supply questions still exist, but as a general, I think many in the industry are looking for improving crop prospects. We'll see how that plays out. Obviously, early frost or a late situation that, because of the late crop, could have some impact. Bears watching as we go through the month of September. We noticed here in the office, looking up in Cedar Rapids as an example, there's only 5 frost dates in the month of September since 1980, in other words, the last 40 years. And in polling several people around the Midwest over the last few days, what's kind of the drop dead date as far as having issues with frost, most think around October 15th is kind of a key hurdle to get by, which generally, at least in the center part of the Midwest, that's kind of a normal frost date on a yearly basis. Exports continue to struggle, again, because of the trade war and because of cheaper supplies elsewhere in the world, not only with the soybeans in the trade war. We're also seeing that with feed grains as the Black Sea and South American competitors have been very diligent in moving product in other parts of the world. So right now the U.S. is not competitive in most of the grains. We're also seeing issues in that regard to some degree in the meats, namely pork, because of the African swine flu in China. They're looking for other locales to buy pork currently. And also we're seeing some concerns on the ethanol demand as we continue to see a build-in supply, and that's coming with slower production numbers. So bad combination. But keep in mind, historically, we export about 15% of our ethanol, which because of the export situation is not happening. So we're producing more ethanol than we can use domestically. Thus, it's putting a lot of pressure on the ethanol industry with really tight margins. So as we go into harvest, that's going to be really key to watch. In certain areas of the Midwest, especially in areas with prevent plant acres, do we see some of those plants go idle or go down for a period of time. Right now, I believe there's 15 ethanol plants in the United States that are idle to some degree. Basis levels continue to be historically fairly strong for this time of year, especially given the negative picture on demand, but it just is a function of lack of movement currently by the producer because of the current market environment. So basis levels continue to be tight, and you're in the time of year where you're winding down with those old crop stocks, with harvest probably starting a few weeks later this year. That means those old crop stocks need to be extended into September and possibly October. So this basis could continue to stay fairly firm here in the nearby. So that bears watching. At the same point, the spreads arguably are still wide. It's almost like the market anticipates the poor exports and the poor demand in general to keep good carries in the markets, both corn and beans. But the basis kind of tells us a different story right now. The market will figure that out. Obviously, basis doing a good job getting bushels pulled from areas of tight stocks or of ample stocks to areas with where there's some need short term for mainly domestic production. So going forward, weather for the balance of the growing season is going to be key as we go into September. Be key to see if we see any cold streaks on the weather maps. If so, the market could react to that. We still live day to day or tweet to tweet, etc. News article to news article on the macro and economic trade swings. And with that, if you have any questions on any of these commodities, feel free to call us. The office phone number is 800-373-2525 or catch us on the web at biscommodities.com. With that, everyone have a very safe and enjoyable Labor Day weekend.